Good evening. Today is April 15th. We made yet another new high in S&P 500, 4166 for the futures. And as Victor, you have predicted yesterday, we had a 1% up day. Actually, just a little over 1%. So I really can't give you credit for that.
No, you'll have to berate me.
Right? S&P 500 traded pretty much in a straight line since the future, straight line up, since the futures opened last night and closed almost at the high. Nasdaq as well was up 1.5% and also made new high of 14,034. And even bonds had a really nice rally until they sold off late in the day. Gold was up 1.5%. So it seems like everything was up today. And
Baron Coleman Day, right?
right. And on the vaccine and health news, Pfizer said that it's likely that people would need a third dose of the vaccine to take care of the mutant virus.
Oh,
Although what he didn't say is why wouldn't you keep needing the vaccine yearly as the current flu, because the virus mutates constantly. It's not a stable thing. But I guess he's enjoying the fact that J&J vaccine is still blocked as the vote by CDC was delayed because they said they need more data.
I wonder if behind the scenes this is a reward for Pfizer withholding the news that they had the vaccine before November 6th.
Right.
And Johnson & Johnson was not involved in that. But I think that's one of the memes that's going on. A lot of the executives, 100 executives who took time off from the Masters tournament in Augusta were uniformly positive concerning the groups that weren't groups that were involved in the protests, the Chauvin protests, and when they took off from their time at the Masters, they realized that the party that is in favor is the progressives, the party that's in power, and that perhaps if they say the right things and support progressive activity as we do, then the progressive leadership will give them a reward, as they might have given Pfizer a reward for their kind support.
Right.
I don't know if it's right or wrong, but that has to be one of the reasons that all the chief executives in their 100-fold Zoom meeting took off from the Masters tournament to support the Democratic Party, as we do. So
right. And Democratic Party is not asleep today at all. They have introduced a whole bunch of progressive, highly progressive bills, a bill to ban high capacity guns, a bill to abolish an electoral college, and a bill to expand Supreme Court from 9 to 13 judges, to which Nancy Pelosi said we need to study it some more before we vote. And
we'll have to see how that
right.
jives with the congressional election of 2022. Of course, our listeners are looking forward to someone who really knows the facts of life, Andy Aiken, and they don't want to hear our support for their favorite groups, they don't expect me ever to be invited to the Masters tournament. In fact, there was 5 years where I wasn't invited to any clubs that played squash. I doubt that they would invite me to be a spectator at the Masters tournament. Although I was partners with Lee Henkel, who was I ran a big law firm, Henkel and Lemon, and he was the general counsel of IRS. And he once got a friend of mine into the Masters tournament to watch it. Okay, let's, so everybody, so instead of talking about the 100-point Zoom meeting and the sparrows who caught the,
Well, we definitely don't want to talk about the sparrows because O'Keefe has just been blocked by Twitter.
what has been, who?
James O'Keefe, the one who exposed the CNN editor-director story, O'Keefe, he's banned from Twitter, suspended rather, from Twitter. And
Well,
he said
okay,
he's gonna sue Twitter now.
Well, we won't say anything about Mr. Chester from CNN, and we'll move on. Oh, but there are some foolish people who don't realize that all my ideas for the market are just lucky guesses. And we kept talking about how the frog was put in luke water, and that when they want to get someone out of a position, they have hot scalding water. Today there was definitely some hot scalding water. The market opened up 20 points, closed up 40 points, is the highest algebraic change in a few weeks. We passed the Soji level with impunity.
Right.
And the next level is the Jackie Robinson level at 4,200. That was Jackie Robinson's number. My father once took me to a baseball game in his police uniform, and we got a Jackie Robinson autograph. And I'm a big fan of Jackie Robinson. I had a lot of his letters that he wrote when he was at UCLA.
Well, are you then still bullish for tomorrow, given that we had a 320 points run up in 3 weeks since the low on March 25th, over 8%? And
well, not only that, but we had a day where everything was up. Bonds were at a new high, and stocks were at a new high, and gold was at a new high, and soybeans were up. I mean, as Baron Coleman would say, everything was up except my wood. And it definitely was not a lukewarm day for the frogs to be fooled into staying in the lukewarm water. And I mean, we definitely have a 4,200 for the S&P in the near future, but whether it will try to bubble down below the Soji level for a few minutes beforehand, I don't know. So I'm not making any predictions for tomorrow. You would think that with a very green day like we had today, with the bonds and stocks at new highs, you'd think that would be somewhat chastening for one market or the other, but the bonds on the 5 occasions that bonds have been up more than 100 and stocks up more than 200 since 2019. 3 days later, the bonds start turning down, up only 1 out of 5 times. Stocks are neutral. I don't like that the European and Asian markets are not showing the fortitude that they're not carrying along with stocks. I would expect perhaps a down overnight and then gradually up to 4,200 in the S&P, but just have no not enough variation for one to make a prediction that has any validity. And but bonds look bearish for the next 3 days. Okay, let's go to much more important things. Is today a new day, like with gold setting a new high and
Gold
getting
was up 1.5%.
and Bitcoin?
Well, digital gold was at 63.5, and Ethereum made new highs. And Ethereum is what Andy, who is about to join us, recommended to buy over Bitcoin a couple of months ago.
My young son, Aubrey, is quite an expert on cryptocurrency, as is my uncle Roy, who's started buying the cryptos when Bitcoin was $5 and $10. Very prescient call. But with gold going back to the 1800 level, close to 1765 today. It was below 1700 a while ago. It looks like the habitat is changing a bit, and the predators are turning their attention to the old standards. Everything's up. They say that you're not supposed to stand in front of a moving freight train. But I don't like to buy it when it's been up, open to close 14 of the last 15 days.
Right, but gold does look constructive. I wonder if gold can run together with Bitcoin, or if it's going to be a change. Given that Coin IPO just came out and wasn't doing as well as people were.
What's it at now?
Yeah, 320. It was down 1.5%.
In the old days, one of the ways that the top feeders justified their commissions and their large bid and ask spreads was they gave all their good customers a priority on buying their initial public offerings, and in general they tended to go up 40. The hot ones went up 40, 50, 100% in a year, and a lot of investment advisors would have a small account in which they'd put all the hot new issues that that they were issued, and they show fantastic performance in their own accounts of 50, 100%, and then they use that to solicit customers. But now the field is changing, and some of the big public brokers like Ameritrade and E-Trade are now giving their individual investors a slice of the opportunity to buy the IPOs at their initial offering price. And of course now they stopped going up 50% because of all the special purpose acquisitions, not such a bargain anymore.
Right. Plus, Coin IPO was a direct listing, not no lockup period. It was a different type of public offering.
I noticed that the most sagacious person I know besides Andy Aiken, Matt Ridley, is talking about the expansion of innovation in China. Everybody is everybody in China, the average Chinese person is 4 steps ahead of the Americans in using their smartphones. There are no menus in restaurants, and all payments are via the smartphone, and investments in centralized loan facilities by the smartphone. In general, the quid pro quo in China is we won't confiscate your wealth. We'll keep our tax rate at 10%, and we won't interfere in your business dealings as long as you stay with us in terms of the Chinese communist culture. Compare that to here, and there are certain areas of conciliation and certain areas that are opposed. But as Stephen Jay Gould says, as you get more and more successful and wealthier, everything becomes equal. The great when Babe Ruth won the home run championship with 60, the second best home run record was, the second best was 18. So there's a difference of 42 between the first and second. And when Roger Maris won it with 62, the next second best was 58. So Gould's hypothesis is that things become in equilibrium and become much more equal as success goes on. Okay, let's see what Andy has to say. It's too bad that we didn't listen to him completely and stop trading the swings in the S&P. I guess the S&P must have been around 3 months ago, it was around 3,500, and now it's 4,200. So we've had a 10 or 12% rise, and similarly 10 or 12% in NASDAQ. But when he recommended Bitcoin, it was 22,000, and Ethereum, which was his special recommendation, has gone has done more than tripling.
Hello?
Well, Andy, thank you very much for joining some amateurs like us.
Well, thank you for having me.
Tell us a little bit about yourself, Andy.
Tell me about what? I'm sorry.
Tell us a little about yourself.
Oh, sure. I've been an investor and trader for really the past 25 years, and I was very involved in tech investing, but then let's just say other types of investments in the 90s and 2000s. But then I got very involved in cryptocurrency investing in 2014 timeframe, and I've been an active investor in that space since then. I've also continued to invest in traditional markets, futures and stocks as well, but have my crypto allocation of my portfolio has grown pretty rapidly, so it's taken a lot of my time.
What was your training? Where did you go to school? Yeah, that's what Bezos used to ask for.
Indiana University, and I got a master's degree in applied math there. So I've done additional work, professional work in quantitative finance, and then of course self-study. But my academic career was in applied math.
And then, what were your vocations like?
I've worked mostly in the pharma and biotech industries over the past, let's say, 25 years, and I've worked either in forecasting or other analytics type work, and so this is, let's say, long-term forecasting or long-term value projection of different assets that a pharma company has, and it's a little bit of different type of modeling than quant finance, but many of the methods are the same, but then also the technology assessment is its own sort of discipline. And there's a lot of interesting techniques that are brought into that problem.
What are some of the firms you've worked with? Some of the firms that you worked with.
I've worked with, I worked at Eli Lilly for nearly 8 years, Pfizer for 5 years, currently working doing a lot of work with Novartis, and I've been at major firms, but then also had my own consulting firm in the industry.
Tell us a story. Tell us a story about yourself.
Well, I guess that the thing is that I grew up in a very entrepreneurial environment, and my father he never had the opportunity to go to college because he grew up very poor and had to support his family, and so I grew up around. He was a concert promoter and did concert promotions all over the country for rock concerts, Broadway shows, everything, and so I grew up in a very let's say music-oriented household. My mother was an artist. My grandmother was an artist. I was sort of the unusual person in my family going into a quantitative field. Everyone in my family was into art somehow, and so I think though that's contributed to who I am. Just the ability to really kind of pull in a lot of different kinds of ideas and not just look at a problem linearly. I think that or my upbringing, the environment that I grew up in, helped me see all sides of a problem.
Was there anyone else quantitative in your family? Some of the musicians?
My dad was very quantitative. He was a businessman. He was a very good businessman, and although he was never formally educated in math, he was very sharp quantitatively. My grandfather was a banker, but my dad was very sharp, even though he was not formally trained. My uncle, my dad's brother, went to Annapolis, and he was an engineer for some time as well. So he was very quantitative.
Uh, Reason magazine has pointed out about 10 areas where the FDA stood in the way of the development of the vaccine.
Hmm.
Uh, what's your take on that? Did the FDA?
Well, definitely they did stand in the way in a few areas. They made it a lot more difficult, especially in the beginning. They really pushed back on what was called the warp speed effort, Operation Warp Speed, which what that allowed, and that was actually a great initiative. It allowed a company to begin, let's say, phase 3 trials or phase 2 trials before they were done with phase 1. And so phase 1 is mainly safety. Phase 2 is mostly safety, but then some efficacy, and then phase 3 is the main efficacy trial. And they were able to run these trials simultaneously, and that had never been the case in the past. And so it allowed vaccines to come to market years sooner than they would have otherwise. It usually takes a vaccine, let's say 5-6 years to come to market. So but the FDA actively fought that all the way, and even the pharma companies were fighting it to some degree because they 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 rely on the regulatory system to some degree to protect them from competition. It's it's a barrier to competition, and although yes, they don't want the liability of a product coming to market that causes problems. It's also there's sort of this precautionary principle rather than a proactionary principle in what drugs get brought to market,
Uh,
and so people.
are there some of the companies that the FDA is particularly friendly with, and some that they tend to have an antagonistic relation? I as I recall, the pharmaceutical companies pay about 30% of the FDA salaries in total.
Oh yeah, it's I mean, and it's a revolving door. I mean, the FDA is, people that have worked at the FDA, they can go to pharma and work in the regulatory or compliance areas of pharma, and that FDA experience is not only very valuable in those areas, but it's I mean, they then have connections at the FDA and so on. And there's nothing more than, I mean, that's the way every industry works, by the way, but in terms of their regulatory approach. But I think uh, but yes, there are some companies that have been very antagonistic toward the FDA, or they have a very rocky relationship. And some of those, I mean, Moderna did for a while, and they've kind of smoothed things over. And I think that they smoothed things over, last year, and getting a vaccine to market, but they had sort of a rocky relationship. And then some of especially these gene therapy companies like Bluebird or Kite or Juno, some of them were bought out by bigger pharma, and so that ended that antagonistic relationship right there. But Bluebird has still had kind of a rocky relationship because they want a more open regulatory environment than what the FDA has been willing to do, or they want a different protocol design, like research protocol design. And FDA is sort of locked into a traditional pharma protocol design, so they fight them on kind of a scientific basis, but it comes out in the public and creates problems for them.
Is
Most
Pfizer,
pharma.
Is Pfizer particularly friendly with the FDA?
I would say, well, definitely. I mean, they've done everything they can to keep a good relationship with the FDA.
Did
Very
one of the
friendly.
things
Yeah,
did
I'd say
one of
friendly.
the
Yeah.
did one of the things that they might have done to keep their friendly relationship up was to withhold news of their testing of the vaccine until after November 6th?
I don't have a lot of, let's say, specific information other than what was known in the public, which was that they collected a lot more data. In other words, they uh, let enough time pass that they had a lot more data, a lot more data on patients than they actually needed based on what they'd agreed on already with the FDA. And so a lot of people have speculated that, well, they did this on purpose because it was like the Monday after the election that they announced that um, that they were going to be able to launch their vaccine, or that it would soon be available under emergency use. So uh, and then maybe adding to that idea is the fact that the very first corporate visit that Joe Biden paid on as being inaugurated was to Pfizer in New York, and he went to Pfizer headquarters and went to a Pfizer plant and so on. So there's a sense of a little bit of mutual back scratching going on there.
Uh, Originally, there were some tests for COVID that the FDA wanted to. They wanted to do those tests in house, and they prevented the tests from being done privately.
Well, there were a lot of bad tests that were, in fact, that they were not going to work properly. Something like 1 million test kits that were sent out that have been, now that was the CDC actually, rather than the FDA, and that's a whole other issue, which the CDC is, although they're not part of the FDA. They're part of the USDA, but they're not part of the FDA. They're separate branch, separate health service. And the reason that the CDC is so involved is they're involved from an epidemiology standpoint, but they're epidemiologists at the FDA. They've got their own. But CDC specifically sets the whole vaccine policy for every institution in the United States. So, for example, they can order hospitals, like if you have a patient at 65 or over come in, you have to vaccinate them with Pneumovax or whatever, and so they set these policies, and the institutions, I suppose, could say, well, we don't want to follow that, but then they have the liability of not having followed CDC guidance, and that's that, like, for example, Pfizer had a pneumococcal pneumonia vaccine that was approved for adults in 2014, but it wasn't until 2000, I would say 2000, yeah, 2012 actually is approved. It wasn't until 2014 that the CDC said hospitals and institutions should use this, and we're putting it into the treatment paradigm or whatever. And it was at that point that usage took off. Up to that point, it had been minimal usage of the product, and now it's a multi-billion-dollar vaccine for Pfizer. So it everything in the vaccine space it's really the CDC that drives that. But they were sending out these test kits that were bad test kits. They were going to give the wrong reading or whatever, and then they had to recall them. But it created a lot of confusion at a time when there weren't many test kits.
What should what should our what should the public know about crypto?
Well, I think that The last time we talked was in January, I think, and it was at the time Bitcoin was about 16,000, and Ethereum was something like 1,100, 1,200, and now Bitcoin is it's just under 64,000, 63,000. Yeah, let's see, 63,800, and Ethereum is just over 2,500 now. So it's risen quite a lot. I was saying at the time that I thought that Ethereum was relatively undervalued compared to Bitcoin, and it has risen pretty strongly in relative to Bitcoin. Um, and so I guess that now my take is, at the time I was very bullish. I'm a little bit more skeptical. It's risen by 400% for Bitcoin, and so it's a little bit harder proposition than it was back in January. But I still think there's probably still room to go. But at this point, it's sort of, I see yellow lights flashing rather than it being such a more of a green light type investment. And we're now well over. At the time when when Bitcoin was at 16,000, it was still under the 2017 2018 all time high, and so it was approaching that all time high. 25,000 was a level of $500 billion valuation, and then a bit above 50 was the full 1 trillion valuation. I was saying at the time those were maybe some psychological resistance. It was blown through both of those. But maybe the thing that is bullish about this still is two things that I think, and that is, one, that we've seen over the last few months a lot of institutions, and not just sell side institutions, but buy side, like firms like MicroStrategy or Tesla, where they're adding Bitcoin to their balance sheets, and they're as part of their treasury management, and so it's at least showing some adoption as an asset that's an alternative to U.S. dollars or other alternatives. So that's one thing. The second thing is, I think we're seeing a lot of maybe some questions about the stability of our institutions, especially in regard to like the deficit and these large spending packages that they don't seem to have any constraints on them. And so, the question is there a large amount of sort of unreported inflation? There's certainly monetary inflation, but is that translating into just rampant asset inflation that we're seeing in stocks and commodities and Bitcoin, other crypto?
So what do you advise now?
So what am I doing in terms of investments?
What do you what's your favorite play in crypto for the public?
Well, I think one thing where I think there's a lot of I think Bitcoin is sort of, if you're investing in crypto, Bitcoin is a foundational investment. It's sort of like owning, let's say, like an S&P 500 index fund. It's a base investment, but I think that the one that I have the largest allocation to outside of Bitcoin is Ethereum, and it's the largest smart contract platform, and it's going to be undergoing a lot of changes over the next year or so that will increase its value and increase its usability. For one thing, it's converting longer term, maybe over the next 18 months, to what's called a proof of stake platform, where it won't take as much energy to manage it, and so it'll be a very relatively low energy platform compared to what it is today and what Bitcoin is today. So that will take one of the arguments away from its non-adoption and it'll make it much cheaper to manage. Um, but I think that what's happening on Ethereum is it's essentially a set of tools that are an alternative to traditional financial instruments. And there's a lot of financial engineering that's happening on Ethereum and other platforms. There's some others too that compete with Ethereum, but there's some really interesting financial engineering that's happening on Ethereum, Binance Chain, Avalanche, Algorand, and so on. And I think that's a value proposition for them. But I have investments in Ethereum and Polkadot and some Cardano, and those are Cardano, Polkadot. They're sort of to some degree competing with Ethereum, but not head to head.
Um, you were very high on Coinbase when we spoke.
Yeah, I actually had a modest investment in Coinbase because I bought it before it went public, actually several years back, maybe 2016, something like that. So I had a little bit in that, and that has done really well. I think the price that I got it at was maybe I don't know, like $75 a share, and it's now 380, something like that. So so I got it at a pre IPO price, but I didn't make what say a seed stage investor made on it. But I think that in a way there are a lot of people who've said that the Coinbase IPO is a sort of short term top, and yet what we've seen is Ethereum today has moved on to a new high. Bitcoin is rallying. Maybe it pulled back a little bit yesterday. I think it's just sort of it's sort of like when Google or Amazon did an IPO. It wasn't the top of the internet stocks. It was part of the adoption. It eventually led to a bubble, and I think I'm seeing some signs of froth in the market, and that it makes me worry a little bit when I see that. So yellow flags or yellow lights, but I don't think I think the Coinbase IPO, it'll give them a lot of capital that they can use to build out and get even greater adoption. The one thing I would add is there are a lot of other companies that are crypto companies that are going to be they're going to be doing IPOs over the next year. I think one is there's some like Circle is one that it's headed up by Jeremy Allaire, who is CTO at Uber and some other companies, and they built what is called stablecoin, which is basically a U.S. dollar backed coin that's on these different crypto platforms, so people can use it to and so what I see eventually happening or happening soon over the next year is that there will be like a crypto backed credit card that you could use or debit card, but you'll have US dollars that are sitting on like Ethereum or some other chain, and it'll be Circle that facilitates all of that, and there's and so you could be earning 8 or 9% interest on your dollars, and then spending it instead of keeping it in a savings account that's earning 0.1% a year. Well, so even at places like BlockFi or Celsius, which you can look those up. Those are companies where you can deposit crypto, and so you could deposit U.S. dollar backed, what's called USDC, U.S. dollar coin, or there's another one, DAI, and these are on Celsius or BlockFi, or two of the biggest, where you can deposit them and earn anywhere from 8 to 12% annual interest. So it's US dollars. It's not tied to volatile crypto.
You have the risk of the value of the coin, don't you? You have to put up collateral, and the collateral can go down.
Well, you have to deposit the dollars, sure, and or you deposit you can. So something like USDC, because it's partially backed by Coinbase, you can you link your regular bank account, and you can buy USDC for no fees. So $100 gives you 100 USDC, and then you could deposit that at, say, Celsius and earn 12% interest on your money. So there are a lot of people that have done that probably weren't very involved in crypto at all, because they could just get a nice return on dollars there.
Is there any risk in that? There has to be.
Oh yeah, I've got some. Celsius also offers interest on Bitcoin and Ethereum, so you can, or other crypto, you can. It's sort of hard to earn interest on Bitcoin unless you use one of these. There's really not a regular bank that will pay you interest on it, but these platforms like Celsius, BlockFi, there are a few others that you can deposit Bitcoin and earn, let's say, 4 or 5% interest on them, and get the price appreciation, or what has been price appreciation, but then you get interest paid in Bitcoin, paid in Ethereum, and they've sucked in a huge
You
amount.
also have to, if the collateral that you deposit goes down, you lose.
That's right. Of course. So obviously you got to think about the asset allocation and so on. That there's some people, I think, where there's a lot of interest in Bitcoin and crypto in general is, I would say, like, millennials and Zoomers have a much higher percent of millennials and Zoomers are invested in these than I'm Gen X, but people my age and older are less invested in this space. But it's something like 40-50% of millennials have at least some Bitcoin or Ethereum or some other crypto, and so I think they tend to also have. I mean, the people that are invested in it are very heavily invested in it, way too much, considering how volatile it is from my standpoint. But I think, and based on some research, I've seen academic research on this, and some papers in different financial analysis journals, and they suggested something like anywhere from, let's say, a 2 to 10% allocation to cryptocurrency can be a portfolio diversifier and give you much better returns over the long run than being invested in, say, stocks and bonds alone.
What's not the money put on Bitcoin selling it, and in case you wanted to protect your investment and get your 8 to 10% protection?
Yep. Well, you can. There are, at least on Ethereum, there are options. You can. Okay, so one, there are futures that you can buy on Bitcoin or sell on Bitcoin and Ethereum, so you can use them to hedge. And there are a lot of people that do that. The people that have big positions, they'll hedge their position if they think it's going to go down, or they can sell, sell calls against sell calls on futures, and if they have to deliver, then they can sell their Bitcoin and deliver it, or they can buy the calls back at a loss if that it moves against them. But so there are a lot of people that do that. There are CME futures on both, but then there are some of these futures exchanges like FTX and Deribit and so on, and technically they're not available to U.S. investors, but there are quite a few people that, say, use a VPN and use them. I don't, but there are people that do that, and so there are those futures exchanges have something like even greater, like, it's basically 2-to-1 leverage that's available with the CME contracts because of the margin requirements. But a lot of these futures exchanges, people are getting like 10 or 20-to-1 leverage. So they're, it, for an investment that's as volatile, or an asset that's as volatile as something like Bitcoin or Ethereum, it's gambling. I mean, basically, but it's like 5 times the volatility of gold, and so 20 to 1 on that you're rolling the dice.
Do you recommend buying Coinbase at this price?
I think it's probably a little bit of a rich valuation right now. I'd say if it pulls back below 300, then it may be an attractive price. But then again, on the other hand, I think the way that where I've seen some different valuations of the company, it's been based on the exchange business, which is a pretty lucrative business, but it's transaction fee based. But they have a lot of business lines of business that are independent of that I don't think those valuations account for as much. So, for example, one is their custody services. So when institutions want to um, buy cryptocurrency, they can't hold it themselves. They have to rely on a third party to custody these assets, and it's really difficult. It's not like stocks where you can just open a brokerage account and all those services are handled for you. With crypto, you you have a wallet that could be a wallet where you have the private keys. Well, who has access to those keys and so on. So Coinbase can handle all of that for institutions, and it's just kind of a turnkey service. Obviously, you pay fees, but if you're if you're an institution and you're invested, then it's a valuable service. So that's one. They also have a huge amount of venture investing that they've done across the industry. Not all of those investments are going to pay off, but a lot of them will. And so I think that's it's going to accrue to shareholder value. So it could be a really attractive long-term investment, but I don't know. Short term, it may be a little bit rich, but longer term, I think it could be really attractive.
And your views on the general stock market?
It's well, it's run a little bit more this cycle than I thought. I think the question is, I don't see anything that is really standing in the way of it to keep going up. It looks like the economy may be even heating up too much, and the Fed's not raising rates in order to cool it down. But things like housing market, if you look at any number of markets that are economically sensitive, like new auto buying, new house buying, even existing house buying, all these are super hot markets right now, and and so unemployment continues to drop. So I think maybe some questions remain with regard to COVID. There are these scares about the J&J vaccine over the last week or so, whether it causes health problems, blood clots, and so on. So if the vaccines don't get pulled from the market and we continue to see a decline in fears about COVID, then I think the market will continue to move up, maybe not at the rate that it has been, but I think we could go up another 10% this year, just based on reduced COVID fears and the economy starting to get back to normal.
Is there anything that we should have asked you that we didn't?
I think that maybe it's maybe the longer term question is what happens with the bond market. I think that maybe that's like things like corporate debt and U.S. Treasuries. They could be in sort of a bear market. Not that there's like a trading opportunity that's immediate there, but that could change the dynamics of the stock market a little bit because there's been such a that the so that could change what investments do well, and so it could change which sectors do well. But
what about in biotech? What are your favorite biotech situations?
Well, there've been a lot of biotech broken stocks over the last year. So if you look at like the biotech ETFs, they perform much worse than the S&P, the spiders for healthcare, which have a lot of insurance companies and hospital chains in them, and have way underperformed. And so there are stocks like Bluebird, which I mentioned earlier, or Frequency Therapeutics. A lot of them have just been cut in half or cut in two thirds because they've had bad data that they've submitted to the FDA. And for a company that doesn't already have a product on the market, it can kill the company. But I think there's probably some gems in the rubble, and I bought a little Bluebird myself because I think that their technology will probably do pretty well. I've been looking at say CRISPR because I think even though there's some questions around the safety of that technology, it could it 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 could get some, as long as they can bring a product to market, then I think they're a buyout candidate, as is Bluebird.
What about actual gold? Do you have any of that in your portfolio?
Oh, sure, yeah. I've always held some gold, and I think that gold is it, even though it's rallied over the last several days pretty nicely, it's still well off its high. And so as Bitcoin and Ethereum, other crypto, are hitting their all-time highs, or close to them, gold is still, I would say, about 10% or so off its high. And so I think there is an opportunity with both gold and silver. But if you look at some of the precious metals that have a little bit more of an industrial use, like palladium, platinum, they've they're a little closer to their all-time highs. So gold does, of course, but there's uh, maybe a different dynamic around gold than there is around those, because the supply is much smaller for platinum, palladium. But I'm bullish on them longer term. I think there's there's maybe some dynamics that have been weighing on them over the last few months.
Is there some concern about those exchanges that you have mentioned that are based overseas, that Americans are not allowed to use, that they're completely unregulated? You're depositing funds into some bank that is God knows where, and you may not even ever see your money back regardless of the interest. Is that a concern?
Sure. Yeah, that's that's the main reason I haven't done it. Is sort of the very famous case was what's called Mt. Gox, which was a Bitcoin exchange in from about 2011 2014, and they got supposedly hacked, but what it really was is that the people that were behind it, they were sort of in on the hack. And this was based in, even though it was based in Japan, so developed country, uh, it sort of vanished one day, and people had what today would be billions of dollars in Bitcoin that they've been trying to get back, something like, because they were eventually tracked down, and the Bitcoin was seized and so on, but they've been trying to get back like 5 cents on the dollar of their original, of their investment that they had on there. And so that's, I think, still a big it's a big risk. And in fact, like some of these, like Deribit, they are under they're being pursued by the SEC and CFTC for doing business with U.S. citizens, even though they say they don't. They would claim that that you knew that these people are U.S. citizens and that you're doing business with them anyway. You're just pretending that you don't know it. And so the person that founded one of those, he's been extradited to the United States, and he's having to stand trial. A man named Arthur Hayes, who he did work in traditional financial firms like I think Goldman, and maybe a few others before he went to Hong Kong to found this exchange. But so I think there's going to be, maybe the other side of the adoption of Bitcoin, Ethereum, and is there's going to be a lot more regulatory action, and SEC, other CFTC, and so on are going to be a lot more involved.
Well, is that then the concern? The SEC, the Powell, if they start regulating crypto in US, is that going to affect, do you think, valuation of Bitcoin, Ethereum?
Could where I think there's some question, and this was a little bit of a question, is that right now it's you can hold a stock, you can just hold the stock cert yourself. You can put it in your own safe or whatever. You can hold it at a broker, but a lot of crypto, or most crypto, is in fact held by people in their private wallets, where there's no like registration. It's not like you've got your name associated with it. It's pseudonymous. Okay, so there's it could maybe tie it back to you, but maybe not, depending on how you've handled it. Well, so there was a bill that was introduced in Congress by the progressive wing of the Democratic Party to make non-custodied wallets, crypto wallets, essentially illegal, regulating them out of existence. And I don't think that's going to go anywhere. It's probably not, because it goes back to the issue of, well, can you hold a stock certificate outside of a broker? It went further than that even. But I do think that it will be a lot harder to be anonymous and hold crypto in your own personal wallet without providing some KYC, AML, and I think it'll change the entire culture of crypto when that happens. But I think it's inevitable.
Does Coinbase currently report to IRS your holdings, purchase price, sales, like they do with stocks?
Well, that's interesting. They've really fought it, okay, because they fought the IRS, and they were court ordered, and this was a few years back, maybe 2018 timeframe, but they were court ordered to provide some data to the IRS, but it wasn't clear that, they said, well, it wasn't clear to us that this qualified as a 1099 transaction or anything like that. But I got this last year, I got a 1099-B from them, and I did the year before too. So I filed that along with my taxes, but it was a little bit of a surprise. They actually did really push back and fight what data they needed to provide the IRS. The IRS wanted everything, like every transaction and so on. And they said, no, we don't have to provide that. Just like stockbroker doesn't provide every transaction to the IRS. They provide a copy of the 1099 form, and so that's what we'll do. So they've fought it in court and lost to some degree.
Okay, in closing, is there anything that you'd like to say, Andy? Thank you very much. This has been very
Thank you. Well, thanks for having me. I think it'll be. I think there's the crypto market. I think it will continue to have really good. I think over the next, let's say, 3 to 5 years, I think it's a good long-term investment. I think we could have, let's say, a pretty big pullback over the summer, because we've had a lot of, let's say, enthusiasm and media attention on it, and so there. My thinking is there might be somewhat of a pullback as that cools off a little bit, but I think the value proposition is very strong in that, let's say, over 3 to 5 years, it'll be a good long-term investment.
And do you have any particular small coins that perhaps you think may become as big as the Bitcoin or Ethereum? Because there are a whole bunch of small coins right now that start trading.
Oh, sure. Well, there's many projects. I mean, obviously, when you get down into some small ones, then it gets pretty risky because they're small for a reason. But I do think that the where there's some really interesting opportunities that are not kind of potential bubble are in what's called DeFi or decentralized finance in on Ethereum, but then there's others too, and so I think that like a Uniswap, that's its own coin, and there's some others. I think the major DeFi platforms I think are good investments to look at because the value, the dollar value locked in these platforms has exploded. It's doubled since January, and I think it will probably quadruple by the end of the year. Right now it's at something like 50 billion, but it'll probably be 200 billion by the end of the year. It'll probably be maybe 2 trillion by the end of 2022. So if there were a financial institution outside of crypto that were growing that rapidly in terms of assets under management, it would be a good investment. So I'd suggest looking at some of those, the big platforms, especially the ones that are kind of the blue chips like Uniswap or Maker. Sushi Swap is another one that's across multiple platforms, including Binance. So I think these are really good investments long term.
Okay, thank you very much.
Thank you, Andy.
Appreciate it.
Thanks very much.